All right, hello everyone. Today is Friday, September 22nd, and today's going to be interesting. We're going to take a look at how our one-to-ones perform after a couple of down days in the market. I've been getting that question a lot, so we'll go over the actual trades. But before we do that, we'll do a little bit of live trading. Actually, we'll just check and see what's going on in our account and if we can put some trades on or take anything down. So let's take a look. So first thing we do is we'll take a look at the delta theta. That's 66 and 89, 66 and 89, and the VIX today is 1602, so it came down a little bit from yesterday. Our buying power use is right here. Let's refresh this. Our one-to-ones are in here, MES, and that's 18.5. 18, no much change there. And the rest of the trades are gold 5.2, 8.5, 11.9 in total, 11.9, 11.9, and Netflix 50, 158. We have a decent down day yesterday. Our gold and bonds were hurting a little bit, but they're coming back up a little bit. So, you know, we're somewhere in line with like a week ago or so. So we have 13 of these trades, one-to-ones. And so we have enough one-to-ones. We can't put any more at the moment. Our overall buying power use is 30, just over 30%. We could have up to 32 given this VIX. Theta is in line and delta is in line, only 0.13. So we're good there. But let's take a look at the trades, and I'll just go briefly over the gold put debit spread. That's the one right here. It's actually been only there for 2 days. We took one profitable put debit spread, or was it iron condor? I can't remember. A couple days ago, and we put a new one on. And on that one, we're down 40%. We were down a little bit more yesterday, but the gold has been coming slightly up. If you take a look here, there you go, a small movement up. So that's fine. Nothing to do there. We can just let it ride. Silver was around 30% for the last couple of days, so that's fine. That one is going on 21 days now. We'll let it. We'll try and get to 50% here and then close it. And the bonds. So we had a put debit spread here at 112 and 100 originally. And that one was hurting yesterday. It got to somewhere between 150 to 200% loss. And at that point, I just opened a call credit spread to bring in some additional credit and slow down the decline, to give us a little bit more time to see if it can come back or not. We're going to be closing it. Now we're in a defensive mode on this one once we open the call credit spread. So we'll be looking for a minimal profit and to get out of the trade. But it's recovering slowly today. So, you know, at the moment we are in a good shape. It's down 42%. Overall, but I make a note here that we close it. We stay with our original 2% loss, our 200% loss on the original collected credit for the original put debit spread, and that was for 430 something, 436, 437. So 2 times that is minus 875. So even though we added more credit, we don't care about it. We're still going to close the trade if it reaches this loss, or we will close it for 25% of the original collected premium, which would be 110. So if the profit and loss here shows 875, we'll close it for a stop loss, and if it shows 110 profit, we'll close it and move on. So that's on that. Now let's take a look at something real quick here. Let's take a look at the market. Okay, so this is the SPX. So if we take this tool here, for last couple of days, and then so let's just take 1, 2, 3, 4, 5, 6. So about a week and a half. This is most of our trades have been open for that long. So if we take this move down, so you can see that this is say 3 and 3.4% down move. And a lot of people in our Discord and elsewhere on my videos have been asking what happens to one-to-ones when you have a couple days down movement. So we'll take a look exactly what happens, or at least what happened with my trades here. And let's go from the bottom, and just to show you, these bottom ones have been the youngest ones. This one has been open only for 9 days, this one for 10 days, 11, and we move slowly up, right? So to the most recent one, this is just a small put debit spread that's left over from the previous one-to-one. But this one here, it's a complete one-to-one trade that's been open for 38 days, have another 7 days left in the put debit spread, and 39 days in the naked puts. On the other side of that would be 9 days open, 56 days left in the put debit spread, and 84 days left in the naked puts. So if you take a look at that particular trade, that one is the youngest one. And overall, if you take a look at this line, this would give you the numbers for the overall trade, one-to-one, including all the strikes. And then each individual line would show you the numbers for naked puts, and then the long part of the put debit spread and the short part of the put debit spread. And you can either take a look at the profit and loss, or you can just go to the actual dollar amounts. So if you can see here, this one is down $91 on the naked puts. However, the overall loss is only $51, which means that the put debit spread is bringing in around $40 to cushion that. So if you say 40 or out of 90, that's in the neighborhood of 40%. Let's call it 40 just for simplicity. 40% cushion on the loss, right? If you go to the next one, it's similar situation because they've been open for about the same period of time. So if you go to naked puts, 88. But the overall loss is 50, if you can see here. And you can see the long strike of the put debit spread is bringing in 46 in profit, and the short one is losing 750 for roughly $40 in overall profit on the put debit spread. And that's out of the 90. So again, around 40% cushion on that one. If we move further up, it should go in the same direction. So let's take a look at this one. This naked put, it's around break even. So let's go back. $56 loss. However, overall loss is 25, which means that the difference is around $30. So difference is around $30. So actually here you can see more protection. Here we're protecting roughly. So this strike here is showing positive, even though it's a short strike, so that might not be a correct pricing. But again, we are talking about 40 to 50% protection from the put debit spread. If we move towards the shorter, the longer, the ones that have been more matured, you can now see that we move into positive territory. These naked puts here have been on for 30 days. And they're positive, they're bringing in $90. So this one here is borderline, it's just about flat, and the overall trade is also flat. If you go to the one that's say profitable on the naked puts, well, now the put debit spread here is slowing lessening the profit. So even though the naked puts would be profitable 145% dollars, the whole trade is only profitable $90. So now you can see here you're starting to lose on your trades a little bit because of the protection. So it would be more profitable if you didn't have this one. So it reverses, right? So let's say this one would be $128 in profit. However, due to the put debit spread, it's only $88 profit. So you see the put debit spread of the 1-to-1 is bringing you in the beginning, it lessens your loss if the naked puts are down, but also lessens your. This is intuitively what you would expect, but it's kind of nice to see here the actual numbers. And so as you can see, basically none of the trades actually is. Let's find some of the newer trades here. So $40 down after 11 days and a 3.5% movement down. That's really not bad, I would say. $40 down on the whole trade. That's nowhere near to be any kind of a problem. So I thought this was interesting, so I wanted to share that with you. And at the moment, I don't see anything for me to really do here. Our numbers are in line. We don't have enough buying power to be putting on any new trades at the moment, and nothing is really at the point where we can close it profitably. Or let's say, for example, this one here, it's 120. Let's go to percentage. It's 60% on the naked puts, and we were looking for 76. Well, we have another 7 days to go with the put debit spread. So since we are not in any kind of danger, we're going to let it go and hopefully reach the maturity next week. But if the situation was different, if our numbers are delta, for example, or buying power was too high, we could close this trade and collect the profit, just a little bit less profit than we would normally expect on the trade. So that's on that. I think that's all. We're going to be doing another portfolio review tomorrow with the final numbers for the week. That's all. Thank you very much. Have a good one. Bye.